you. Did insurance companies use a loophole in state regulations to drop high-risk homes and still get their rate hikes approved?
Yeah, it's a question many people are asking. It's the allegation in a New York Times investigation. Consumer investigator Christine Lazar joins us now with more on the allegations. And you have reaction from the insurance commissioner, Christine.
Yeah, good morning. So the state's sustainable insurance strategy was created to encourage insurers to write more policies in California, especially in those fire-prone areas. And in return, those insurers could raise rates. But critics say the strategy isn't working. I'm joined now by Insurance Commissioner Ricardo Lara. Commissioner, thank you so much for joining us this morning.
Good morning. It's good to be here with you.
So to begin with, do you think the strategy is working?
Well, the truth is that we actually been collaborating with the New York Times for months, providing extensive background and information. And we are barely in the implementation stages of what is truly really first of its kind strategy. And so, we are still in the inception of this. And so are we expecting insurance companies to try to find loopholes? Absolutely. I mean, this is what they do along with the interveners, right? Trying to figure out ways to cut corners. But we're expecting this. And this is why the sustainable insurance strategy has something that we've never had before: reporting and data requirements, where we're going to be able to track this for the first time. And so we welcome the reforms, and we welcome news media to help us be able to catch this, because it's going to take all of us, because we've never done this before, to be able to modernize our market, to be able to understand how these fires are impacting, and climate change are impacting our markets, because we cannot have regulations that are static and keep us from being stagnant and allow another 30 years of not having outdated regulations to keep us moving forward.
So now that we know that there are these loopholes that they're taking advantage of, because the New York Times found that the top 3 insurers in the state dumped 50,000 policies before those new regulations were finalized, what do you now go back to these insurers and do? How do you, make them basically play by the rules?
Well, we're in the process of implementing all these new regulations that we got done last year. So as we are rolling out our new reforms, we are in the process now of making sure that as we have these guarantees now for coverage, which, by the way, no other state has, we have now updated tools, updated technology that allows us to guarantee that they have to grow in these wildfire distressed areas, which, by the way, is something that no other state has. We'll be able to track that now real time to make sure that, one, that our FAIR plan is depopulated, that insurance companies are coming back into these communities, again, something that no other state has, and then we have the legal authority to hold them accountable. This is still in the process of being implemented. So as this is rolling out, we have the tools to make sure we keep everybody honest. And that is something that we are just implementing. What the real loophole is, which is what the current law is now, where insurance companies continue to raise rates, interveners continue to make millions of dollars, and there is no guarantee for coverage, abandoning current communities that have been decimated by these wildfires. And so we're changing that with the sustainable insurance strategy.
And speaking of those communities, the 1-year moratorium on non-renewals in the Palisades and Altadena fire areas and the nearby zip codes, that'll expire at the beginning of the year. So what's being done to ensure that these areas won't all be forced onto the California FAIR plan once that moratorium expires?
Absolutely. So areas like the Pacific Palisades are part of our wildfire distressed areas, because we know that for years, those areas have struggled to find insurance. And so many of them have already been in the FAIR plan. So those are part of the area that is already within the sustainable insurance strategy as a target area for us. So insurance companies, if they want to use the latest technology and be able to use reinsurance, they have to go back into those communities. Again, a new regulation that didn't exist before. So they have to go back into the Palisades. They can no longer abandon that community. Currently in Altadena, that wasn't the case before. This is why it's important for us, as soon as the moratorium is over, we're going to rerun those numbers. And if that is the case, where now we see more communities in Altadena that are being forced into the FAIR plan, we're going to update those numbers. And if they're in a wildfire distress area, then we update the regulation to incorporate that community. And that is the beauty about this regulation, that is not stymied or outdated, that it is something that's alive and breathing, and we're able to update, unlike the current regulatory scheme that we have now that just relies on outdated historic data. So we're able to update this real time to address real time issues, to address real communities that are suffering at the moment.
All right. Thank you so much for joining us this morning, Commissioner. We appreciate it.
Thank you.